Uber reported fourth quarter fiscal 2022 earnings that pleased the market. The stock went higher as a result. This was in stark contrast to its rival Lyft, who saw its stock crash over 30% on the day following its earnings report. So let's take a look at Uber's results and see what the market liked so much about it. Overall, revenue increased by 49% in Q4 to 8.6 billion. This is a bit misleading because of acquisition of Transplace made its revenue growth look better than it actually was, so take that with a grain of salt. The loss from operations improved to 142 million. This was down from a loss of operations from 550 million in the same quarter the prior year. This was a significant improvement and finally some progress, meaningful progress towards profitability from Uber, and this could be why the market liked the results. Up until now, it had been giving you a lot of non-GAAP and adjusted figures and showing improvement in those figures, but this was truly one of the few times I've seen Uber show significant progress in a non-adjusted, non-GAAP figure, and this was impressive to me. I dug a little bit deeper to see what caused this growth, and it was in an area that I like to see. It was from a reduction in spending on sales and marketing. The company reduced sales and marketing year over year, and this is what I've been calling for between all of these companies in this industry, including Uber, Lyft, DoorDash, and others. They've been spending so much money on promotions and competition that it's bringing everybody down. It's creating losses across the industry. So the fact that Uber has been decreasing sales and marketing spending, that's good news, not just for Uber, but I think it's going to be good news for the industry overall if the level of competition decreases. Monthly active customers increased by 11% to 131 million. That's a really good figure. Uber's got two sides of the business, right? They've got Uber Eats and they've got the Uber Rides side of the business. The Rides side of the business is the one that's really accelerating now as economies have been reopening and people are wanting to go out and go places. Meanwhile, the food delivery side of the business is still holding its own. It's not reverting back to pre-pandemic levels, and that's industry-wide, which has been a surprising outcome. A lot of analysts were expecting food delivery spending to go back way below to where they were before the outbreak, and that hasn't been the case, and that's good news. The number of trips increased by 19% to 2.1 billion. So not only do they have more customers, but they're also taking more trips. The gross bookings increased to 30.75 billion. This was up from 25.87 billion in the same time the prior year. This is how much the customer spends, not necessarily how much Uber gets as revenue. Uber takes a percentage of the gross bookings for itself as revenue, and it can adjust that rate up and down, the take rate, depending on where it feels its power lies in the pricing power with its food delivery partners and its ride delivery providers. Cash flow from operations, however, worsened to negative 244 million, down from negative 170 million in the fourth quarter last year. This was not good news, and the market kind of overlooked this fact. Thankfully, they're forecasting bookings to grow by 22% in the first quarter to 31.5 billion. So the robust growth is expected to persist in the first quarter of 2021. Overall, a good quarter for Uber, but it still doesn't change my recommendation. I don't have Uber stock as a buy. I don't like the ride delivery and food delivery industry overall. Uber is one of the best ones in the industry. However, the industry overall is not one of my favorites right now because one reason is the fierce competition and many other reasons as well that I won't go too deep into right now. I'll save that for another video. So that's all I've got for this video. I truly appreciate your viewership as always. I hope you come back and see me next time. Thank you for watching. I'll see you then. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.